Hello, everyone, and welcome to Pearls of Fisdom with Nirmal Bang. I'm Avan Babash. Now, the Indian real estate sector is experiencing a significant evolution. It's not only drawn the focus of a lot of the industry experts, but it has also been capitalized by key players within the Indian realty space. And there's a striking correlation as well between the Lok Sabha upcoming elections and the Indian real estate space. So let's understand a little bit more about that, as well as the surge in residential activity, average prices, reforms with the elections, with none other than the management of Keystone Realtors. Joining me right now, we have with us Boman Irani, who's the chairman managing director of the Rustam G Group, which is of Keystone Realtors Limited. Thank you so much, Boman, for taking time out and being with us today. Now, we're talking about this correlation between the elections and the residential market. And, if we were to just take it back, the kind of data that has been drawn from the last two elections, it's been that there has been a surge in residential real estate activity. How is it that you're looking at the landscape of the real estate sector in light of the elections?
So, Avan, that's a very pointed question. First of all, thank you very much for having me on your chat. I think the real estate or the residential sector in this country has really changed after, I would say, COVID. But COVID was not the only reason. We are seeing a huge surge or a growth in the wealth availability or the ability to buy homes amongst people. And, while we were talking in between with other people, they used to always say rising interest rates will see a reduction, etc., etc. None of that happened. It was because there was a growing need, which was now being addressed by developers. The comfort that people had with branded development or good development was also helping people buy more. People were investing. Largely, if you take the last 100 years, I would say 60% of the wealth for Indians was created through the real estate, route. And it's only in the last, I would say, 25, 30 years that got a little side railed because of, developers who were constrained or would not be able to complete projects, and customers badly suffered. I think that also got largely sorted out with RERA. And today, a customer is a lot more discerning. He knows what he wants, and he's not just buying four walls and a ceiling. He's buying an entire lifestyle. He's buying into a community. He's buying into I would say, a future for himself or herself, right? They're ready to invest a little more, and they understand that what happened in the US post World War II, what happened in Japan thereafter, what's happened in Korea, what's happened in China is now happening in India. What's happening exactly? The wealth, the average Indian has a lot more in terms of the wealth creation to themselves. There are jobs. India has become the country of choice where people are investing money. Foreign direct investment is finding a safe shore right here. You are seeing people getting employed better. Educated people are growing in number. We have a general feel, a good, how do they say this, but a factor of good feeling that is leading people to invest more. It's not only happening, it's wrong to say it's only real estate, but look at the automobile sector. They're doing extremely well right now. Look at the luxury sector. It's doing extremely well right now. And we are still at the tip of the iceberg. The way I like to see this going forward, and the way I think it is, depending on the reports that I'm reading right now, unless there's some black swan event which could create a disruption, I'm seeing the next, I would say, 7, 8, 10 years as an extremely positive time for the growth of India as a country and Indians as a people, to continue being this strong, or maybe even grow stronger. And we've got all the favorable winds, flowing in or rather coming to our direction. It's only about how we take it. And every day we read, the latest buzz news, and it always helps to, have this kind of news. Apple's invested, Foxconn has invested in India. You have Elon Musk making...
Tesla's coming.
That's what Elon Musk making a move out here. You look at the kind of growth that we are addressing, right? It is the government's data that 7 crore homes, there's a shortfall in this country. Do you know what the total output is? About 5 lakh homes. Now you imagine the kind of growth that's possible, right? Or the kind of growth that there has to be so that we can take care of only this need. So overall, I would say nothing to do with the elections, but a great time to be in the real estate sector if we can just continue to be focused real estate developers, providing what is needed by the buyer base and giving it in an organized, structured, honest manner on a continuous basis will see the growth of some very large companies, and most of them will be real estate.
That's good to know because be it RERA or even GST, there have been a lot of reforms that have really transitioned the entire real estate sector as a whole. What is it that you're looking at by way of the policy reforms that have taken place by the Indian government? And how does that really alter the dynamics of the real estate space? Is there any sort of a wish list that maybe you within the real estate space have?
You told me it's a 20-minute show. If you allow me to express my wish list, we'll be talking all night. But no, let me tell you about 2 or 3 things. One is GST has not exactly gone the way it should as far as the real estate sector is concerned, because you took away the input tax credits that were available to us. So our on our wish list and highest on our wish list is actually that GST should be where a developer at the start of a project can decide whether he wants to do the assessment or the composite route. The assessment route being 12%, and then getting input tax credits, or the composite route being the 5% that there is. And I can tell you, largely across the country, the affordable or what's identifiable as the affordable housing is what is probably going to opt for the assessment route, wherein they will say that we're ready to pay the higher higher GST rates, provided we get the input tax credits. And the reason for that is very simple. If you take a brush and paint the country, you'd say that maximum homes are sold in the 5,000 rupee bracket. And over there, you're looking at construction costs being about 2,500 rupees. Now, when you take away input tax credit of 18% on that, that's a huge number. That's actually their entire profit being wiped out. So that is definitely something that we'd hope for. Having said that, we are extremely thankful to, I would say, the vision of our Prime Minister, who announced that there's going to be homes for all. And to back that up, the other thing that has happened is he has managed to kind of improve the image of the Indian real estate or the Indian community or the Indian development that's going to take place. He's sold the India story so beautifully that there is a lot of inflow of capital coming in, and capital is going to be one of the key drivers. There are a few things that one can really wish for, and one of them is land funding. There should be an organized route for land funding so that it does not become over expensive and does not become the domain of only, let's say, the very, very rich. Having said that, it's real estate is a complex story of the world. Nowhere in the world have I seen that real estate people have got a grip on what exactly needs to be done. There's always a slip, in what needs to be done versus what gets done, and this is internationally. So I will say credit goes to some of us. I mean, there is the developer fraternity called CREDAI that continuously works with the government, continuously works towards changing the perception, asking for what is the need of the hour of the developers, putting across a lot of, there's been a sea change. Earlier we used to go with I wish, I want, etc. Now there's hard data that we are putting out there. And I must give it to the authorities in the government. They may have been slow, but they're actually much faster than they were before. And 2 is they are reasonably accepting a studied point of view, which makes it extremely doable as to be able to take our point of view, because now we approach them not just with feelings but with actual reports. And I'm hopeful that once the government is back in its stead, we will have some very important and interesting policy changes that will come around. Of course, we at CREDAI will continue to work towards the betterment of our housing supply, because that is something that we all need.
Sure. Now let's talk company specific. Rustam ji, 20 million plus square feet of real estate space delivered, 280 plus buildings that have been, delivered by Keystone Realty, and it's an asset light model. So you have no land bank in Mumbai city. Give us the sense as to how you're looking at the overall demand momentum across different ticket prices, and for the group as a whole, do you see that sustaining?
So, very quickly, the Indian market this year grew by around, I would say, 28%. You had close to around 5 lakh homes in the recognized residential real estate space selling. 41% of that sales took place in the MMR. So that is a huge number, right? And between MMR and Pune, I think that number was about 50%. So that is a huge number. As far as we are concerned, we are primarily Mumbai-focused real estate developers, and of course, we are in the MMR area with Virar, with Thane, and now with Dombivli. We will continue to be growing our strength in this market itself. And to just give you an idea, last year we had launches of close to 3,000 crores. In this year now, in our 28th year, we've just completed 28 years of existence on the 14th of April. And well, thank you. And in this year, we're looking at more than doubling our launches that take place. And while we're very cautious with our guidance generally, I can say this, that we continue to be a company that learns as we grow and then continues to grow on that learning as well. Our teams, which we have bolstered now with newer people, are getting a dose of our culture and then being given the wings to kind of fly higher. Rustamji will continue to be a Mumbai and MMR centric developer. We will grow in the Dombivli market because we believe that's a great market to be. Thane continues to be a steady supply in our township. And again, the numbers out there have grown by almost 20-25% in terms of the pre-sales that we did. And Mumbai redevelopment, which is such a buzzword, which we started in the year 2000. So we have about a 20-year, I would like to say, experience in the redevelopment space. We see this market, and we see this market means everybody who picks up the newspaper and reads sees this market phenomenally growing, and every developer has decided to enter the business of redevelopment, which I think is excellent because Mumbai needs rejuvenation. We've got buildings that have been built 50 odd years back that were built more to take care of the incoming load from the rest of the country, and slum proliferation took place because that was also not enough. But given the fact that DCPR now allows me to build a better home for these people, the advantage is largely to the environment and to the residents of Mumbai, because you have more sustainable buildings being built today. You have a better consumption taking place, thereby the absorption that takes place of the newer residents is towards larger accommodations, which are not restricted in size. So you have families growing which can do well. And we continue to be, let's say, the leaders of the redevelopment space. And we continue to focus in areas that we are strong, which is on the western suburbs. We are extremely strong. Bandra East, Bandra West has been our home market. We are also growing into Sobo area now with the entire infrastructure growth that has taken place with the coastal road. And it makes it just simpler for us to be able to operate on that side as well. And we see some tremendous demand given the good locations that are coming to us. We also focus on some part in slum redevelopment, because I feel that 60% of the total land of this city is in a way under slums, and it is the government's mission. And if we heard our dear Deputy Chief Minister speak some time back, he mentioned that he's well on the path to make sure that by 2047 we'd be a slum-free city.
Sure. No, and I also wanted to get in your take because you're very optimistic then with respect to the kind of projects that you're looking to add. What is the potential gross development value that we can foresee down the line, even including the 2 township projects? What kind of visibility is that offering over the next few years?
So, our townships are our steady state launches that we keep doing. For our new launches, we turn towards JVs, JDs. We have one that we've, a big one that's coming up in the Mahim Matunga belt because we believe that's a great location. Totally, I think our launches in the coming year would be crossing about 7,000 crores. We would have, this is including the townships that we are launching. And our total GDV of projects available is close to around 38,000 crores, which we should be launching in various phases. A large part of that, I would say 50-50, lies between our township projects and then all the newer projects that we are acquiring. We acquired close to around 8,500 crores worth of projects last year. In this year, again, that stream continues. So we keep adding almost 1.5 times the stock that we have sold or built out in a particular year in terms of the business development that we do. And we'll continue with that trend. I see a very good demand in. I should tell you this. So Fisdom is one of those companies that spread across all spectrum of development. We have affordable homes we do in Virar and now Dombivli. We have mid-mass, which is 1 crore to 3 crores. We have that in Thane. We have that in Borivali, Kandivali, and now something that we will launch further in those markets. We have aspirational, what we categorize as 3 to 7 crores, everything from Andheri West coming all the way up to Bandra East, and some parts of Sivri, etc. also. And then we have premium and super premium, which we categorize as above 7 crores up to about 20, and then going beyond 20 all the way to sky's the limit. So we're spread across all these types, and we are also one of the few companies that does development, greenfield, brownfield, that is redevelopment. We do JVs, JDs. We've had scores of partners who we've developed projects with. We have a 28-year history of completing every project and handing over apartments with a full OC to our consumers. We've been one of those who's been very well on the path of avoiding litigations. Our only litigations happen is when there is a point in law, especially with the government, where we believe that there are certain things that we can get, and we're very reasonable on that as well. We spend most of our time on creativity.
And you also place quite comfortably when it comes to your debt. What is the outlook then? Are you net debt free now? And what about your cash flows as well? Can you give us a sense as to what that would, where that would place your gross margins to? A quick word on that.
Yeah, sure. Our pre-sales last year were about 2,260 crores or thereabouts. Our collections were about 2,200 crores or thereabouts. And the area that we kind of sold was about 1.21 million square feet. If I give you in terms of growth, on our pre-sales, we were 41% higher than the year before. On our collections, we were 18% higher. And then on our launches, we were 18% higher as well, 18% higher as well. Our debt philosophy, at one point in time, we were very debt heavy. But from 2018, we decided to kind of, go down the path of reducing our debt first. And at that point in time, the company actually took a point, we at the company took a point of view that even if we have to reduce the growth that we have to be able to achieve this, we would do it. And we did it extremely well. And today our debt, I would like to say, is our gross debt is about 50% of the equity. And our net debt is about 26% or 28% or thereabouts. I can give you the exact numbers, but just give me a minute on that.
Okay.
I'll take some time to give you the exact numbers.
That's not an issue. Gotten a fair idea. Am I right in saying that the management needs to pare down the shareholding as well to meet the listing norms? And is that going to be done? And what's the game plan there by November 25?
So elections aren't really a great time to go and try to liquidate your equity. Yes, there is a requirement of SEBI for us to bring down our shareholding to 75%. But we have ample time. We believe November 25 is still quite some time away, and at the right time we would need to do what we need to do. But as of right now, we see a huge demand, that is coming our way, and we continue to serve this demand, or take this demand in.
Okay. And, revenue, profits, they've continued to improve on a year-on-year basis. Margins have contracted a little bit, slightly. Just wanted to get in sort of targets that you have in mind. You were very, you sounded very optimistic on the overall launch pipeline, on the demand growth scenario. So where does that take revenues, profits, and margins to?
So our which I mentioned to you earlier, 28 years of having a history of completing all the projects with OCs, no matter whether you had to take a hit in a few, is what we've kind of done. And what I call my legacy projects have come to an end. And this year we'll complete all our legacy projects, after which our true profit margins will start hitting. What we do is, when we acquire a project, we're looking at close to around 16 to 17% margins post taxes. And that's how we work it out. Our gross margins are at, in the region of about 35%, after which we have, interest and other costs, etc., deducted, and then there are taxes, after which we aim for about 16% as our margins that will be, or our profits that will be there post taxes.
Any risks whatsoever when it comes to the timelines for society redevelopment, stretching, or with respect to the elections over the next year or so? Would that result in delays in approvals at all?
I don't think elections have anything to do with delays in either approvals, if you're in the normal trend of approvals, but you do not get any additional out-of-way benefits. I mean, that's a standard operating process, so we do not try for any of those as well. As far as we are concerned, the normal time that we take between being identified as a developer of choice to actually launching a project that is in the redevelopment space is about 13 to 15 months. And these could be so some projects we've launched in under 9 months as well, after being selected as a developer of choice. But then that depends largely on the size of the project, because as you're aware, there are agreements to be entered into, tax considerations to be taken into account. Then there are designs that need to be kind of put up to the societies. You need to go ahead and get approvals from the authorities, and then there is environment clearance if the projects are larger.
Yeah.
And if they're CRZ projects, then you need CRZ clearances as well. So that's why about a 13 to 15 month average time is what we take, and we've been extremely successful on that account. There will always be a project which is an outlier, but that is something that we understand. So if you launch about 10 projects, we try to be on time to launch 8 at least in the time frame that we're talking about, in the 13 to 15 months. And then again, we have made or built in an efficiency into our system, whereby which we are now taking projects that are in the 3 to 5 lakh square feet, which we can turn around in under 4 years' time overall, which kind of leads to healthier margins and also allows us to have a continuous cash flow.
Okay, and a quick word in terms of the pricing behavior in the MMR region. How is it that that's faring? Between
the time of launch to the completion, I would say a healthy growth in prices would be about 25 to 30%. And this is normal, because people are taking more of a call when they're coming and booking at launch versus when they're buying a ready product. But otherwise than that, I'm very happy to state that developers today, the organized developers, I'd like to say, believe in velocity being the premium. And no one's trying to make the maximum in terms of margin on the price, because it really does not help. When I'm selling my last apartment, if I'm trying to take a very, very high price, it really does not help me, because my replenishment cost of my further stock is then pegged to that particular sale price, rather than taking an average. So we at Rustomjee have a strategy whereby which we sell about 35 to 40% of our stock on launch. We sell about 35 to 40% as we build, and about 15 to 20% is what we sell closer to completion. And this has worked very well for us. It allows us to take care of the inflationary trends. It allows us to keep a continuous cash flow as far as the projects are concerned. We work on a very asset-light model, so we try and work on 10% equity, 10% debt, and the balance we work on cash flows due to pre-sales that we kind of garner. These models also allow for a better margin and a more structured way of working.
Okay, since this is called Pearls of Fisdom, last and final question, 28 years plus that you guys have been in existence, what have been that one key learning or that one piece of advice that you want to pass on?
I'd sound like an old man if I said this, but keep one eye on risk. This is one business in which you could get hit from the side at more times than you know it, right? One needs to learn from all the past issues that one has faced. Keep a good, how do I say, keep some dry powder at all points of time available with you. In driving terms, if your ability is to drive at 100 miles an hour, drive at about 65, 70, just keep, and I would say this, build a strong board or a group of advisors, if you have one, that are telling you things that you would normally not see in your day-to-day operations. I'm very thankful to my board. They actually keep me in check, and we've had a very good board for a very long time, and today our board is a very good guide for us at Keystone Realtors.
And I think that really speaks for itself in the kind of performance, the projects that you guys launch, the execution timelines, and the reputation. So, Boman, thank you so much for taking time out, and it's good chatting with you as always.
Avan, thank you very much. Have a lovely evening.
You too.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.